Hi, we are the Purple Devils, and we will share with you our strategy for how to increase the revenue for Cybertron from $50 million to $250 million in 5 years. We have selected Australia, China, and Thailand to focus our growth effort, and we will do so by capitalizing on region-specific trends and potential growth rate through the use of three strategies. The first strategy we have identified is to establish partnerships with local players for quick access to new sales channels. The second strategy is to introduce products selling in one market into a new market to utilize existing sales channels to gain revenue quickly. And in the third strategy, we have identified emerging therapy needs in these regions, and we recommend moving quickly to capture market shares.
Why the following countries? We believe so for four main reasons. First, Australia and Thailand have very short product approval time. Second, all three countries have a high adoption of generic drugs, which allows Cybertron to capitalize on its existing licenses. Third, all three countries have extremely good growth potential, with China being the largest market at $92.5 billion. And last but not least, each country have region-specific conditions that made them attractive. For Thailand, it's antiemetic therapy. For drugs, it's anti-cancer drugs. In Australia, the existing infrastructure allow new drugs to be deployed through existing channels.
The first market that we will be targeting is Australia, firstly, for a strong demand for neurology drugs, and secondly, for the increasing trend of generic adoption. Australia has the second highest per capita spending in Asia Pacific on pharmaceuticals, just behind Japan. It also has an aging population that has a high demand for neuropsychiatric drugs. The dominant government policy has been emphasizing increasing generic consumption over time. This has reflected itself in changes to price mechanics as well as prescription reforms. The regulatory system is also amenable to introduction of pre-approved drugs, already approved in the Europe or US pathway. It also has priority schemes to reduce approval time by up to 3 months. In Australia, our strategy is two-pronged. Firstly, to ride on the trend of generic adoption, and secondly, to introduce existing neurology product offerings. These two offerings are Tysabri and Rebif, which have been approved by the Therapeutic Goods Administration and is also on the Pharmaceutical Benefit Scheme. Secondly, we intend to partner with one of the three dominant wholesalers. These wholesalers have the majority of pharmacies in their network. Thirdly, we intend to introduce generics to target existing direct sales of patented drugs. Currently, 30 to 40% of current hospital purchases are direct purchases from drug companies. We also intend to target patented drugs that are coming off patent.
With our growth in the Australian market assured, we next look to emerging Asian markets for new opportunities of growth. The Chinese pharmaceutical market is the second largest in the world, in part due to the high incidence rates for cancer in the country. China's projected anti-cancer drug market is expected to hit $30 billion by 2024, and high price sensitivity for pharmaceuticals, alongside a lack of confidence in domestically produced generics amid recent health scares, translates to a very high demand for imported generics. And this creates a business environment that is increasingly conducive for foreign distributors such like Cybertron. In addition, the Chinese drug distribution base is fragmented, with the market shares of the top three Chinese distributors only totaling 22% of the domestic market at the end of 2010. We propose to focus on distribution to smaller hospitals and healthcare clinics, for which the greatest growth has been observed. By partnering with local distributors in the suburban parts of the country, for example, in central and southern China, for which significant portions of the market remains untapped, Cybertron has the unique opportunity to introduce products in its existing oncology portfolio to Chinese consumers in a fast and efficient manner.
Besides China, we think mid-sized emerging markets are also important future sources of growth. For that, we have narrowed down to Thailand, which will serve as a good test model as a mid-sized emerging Southeast Asian market. We will adopt a two-pronged approach in Thailand. First, we will increase Cybertron's presence on the ground locally. We will expand partnerships with the rapidly growing local pharmaceutical manufacturing industry, and these local partnerships will also align Cybertron with the government's interests towards cost containment. We will offer to collaborate closely with the government by offering cheap and high-quality drugs reliably to the hospitals and pharmacies. Lastly, we will recruit, train, and retain local sales force to improve sales excellence, and this local talent will also help in refining our strategy. The baseline strategy here in Thailand is to grow top line and gain market share rapidly in the next 5 years. The second part of our two-pronged approach in Thailand is to diversify Cybertron's portfolio by focusing on anthelmintic therapy drugs. Cholangiocarcinoma is highly prevalent in Thailand, particularly in the northeast region, and this high incidence is known to be associated with liver fluke infection. Cholangiocarcinoma is generally a fatal tumor with extremely poor prognosis, and the best way to reduce or eliminate the disease burden is through mass anthelmintic therapy to high-risk regions with continued surveillance. We believe that Cybertron can diversify its portfolio and make significant market gains by striving to be the chief distributor of praziquantel, the drug against liver fluke infection, while collaborating with the local government to offer cheap mass anthelmintic therapy.
This is our growth strategy for Cybertron Pharma in the coming 5 years. For Australia, we will first start out by enhancing our drug portfolio through the addition of neurology products. Secondly, we will access new distribution networks through partnership with dominant wholesalers. Thirdly, we will target direct purchases in drugs that are going off patent.
Our Chinese strategy is based on a low markup, high volume business model to tap into unmet needs of Chinese consumers for imported generics. We aim to enter the Chinese market as quickly as possible through the establishment of joint ventures with good storage practices certified local distributors in the central and south regions. Once our oncology portfolio is approved by the Chinese FDA, we will petition for their addition to the National Drug Reimbursement List to protect product sales in a price-sensitive market. In the long term, we will strive to mitigate risk in the Chinese market through the active diversification of both product offerings as well as the geographic areas of focus.
For Thailand, our strategy is centered around the 3 E's. First, we will establish partnerships with local manufacturers and solidify our existing products and introduce praziquantel distribution. Second, we will establish joint ventures with the government by discussing the implementation and execution of a mass anthelmintic therapy program starting from the north. Last, we will expand our local sales presence and leverage our local talent to refine our strategy.
These are the milestones for Cybertron between 2018 to 2023. Cybertron enjoys significant presence and robust growth in the Australian market. This growth momentum should be built upon to secure a stable and consistently growing revenue stream for the company. With the assurance of the Australian market, Cybertron is well positioned to then pursue aggressive growth goals by way of entry into the Chinese market. Initial capital and manpower investments required can be acquired through Australian revenue streams and de-emphasizing the Japanese and Indonesian markets. Lastly, to mitigate risk, we recommend that Cybertron develop Thailand as a test model country to explore mid-sized emerging markets. We expect sustained growth for Australia throughout this 5 years, China to be instrumental in driving revenues to $250 million in the second half of the 5-year plan, and Thailand's market penetration and revenue to pick up towards 2023 with rapid growth stretching into the years beyond.